Jobs, 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 jobs. Doc here from North America. Well, they bounced the market back up. That's nice because they were getting scared that this thing could do like 325 or some big number that they're not really ready for. So let's see. Just take a look at it. You see that they've moved up. Where's it at? This is the most short term of it all. Right there. That is 50 seconds ago. So they went from the low 4,040, 444. Fo to fo 5. Is that yes? Well, actually, I guess you could say it's about 9 points, 7 points, 6 points, something like that from here to there. 6, 7 points. They perked it up. They dodged a bullet. You know, it's the markets are just they are built on the Fed put, the free Fed put. And that put doesn't just cover equities, it covers bonds and it covers stability of, money flow and all this other things. This is one big, remember, there are no New York specialists anymore or the NASDAQ specialists or funds can't push markets around anymore because the Fed just steps in and does what it believes is right. Quantitative easing, which means basically consistency, stability in the way they view it, and so there is no. I don't want to use the word free market anymore, but there's no market that's pressured by the volatility of supply and demand fundamentals. Those things have kind of disappeared. Let me get the chat line up. That's what it really comes down to at this point. Is that the fundamentals? Hey, there's Janos. Hey, Janos. Yeah, the fundamentals are gone, and they do occur. They still come out. Money managers talk about them like as if they're real. In other words, they're deciding factors. But more than anything else, is the deciding factor is that the Fed, is going to keep. Excuse me. I think I'm going to have a sip of tea. They're going to keep the markets stable. And that's what they really want, just stable markets. Especially with an election coming up now. That makes it even worse. Because the labor number, they need a 209,000. That makes the Fed look like, well, then maybe they won't raise rates, And I imagine we see that little teeny-weeny little action going on when it comes to the dollar. You can see it right there. There's a dollar. Oop. Let's close this stuff down. 209. There we are. Oh. Okay, right there. So, right there, you can see the dollar index dropped from that. And, let's go to like an hour. We have an hourly euro. Because I think it was Benny or someone like that was watching it. So we kept there. It is right there. Our euro. And so, and when we break it down in Doc world, in other words, let's just go to like, just to view it, let's go to 1 day and let's make it 1 minute. Or let's make it 3 minutes. I can't handle such a tight thing. But here's 3 minutes. And there it is. Once that news came out, there was right there, it just ripped. And that's the nature of it right now. They need that stability. They want that stability. I remember yesterday laughing towards the middle of the webinar because a headline had come out that the Democrat Party in New Hampshire, which is always the first election, in their constitution and their law in the state of New Hampshire, it says that they have to be the first primary of the year. So in other words, if someone starts theirs on Jan 3rd, they'll move theirs back to Jan 2nd. If someone starts it on Jan 1st, they'll start it, at the end of December, 1 minute before midnight, that type of thing. Now they Let me chew something. Maybe that'll take that away. And so that's where we're at. The election is coming around the corner. They found that cocaine in the library, then moved to the, I don't know where else, but waiting room or something like that. I don't know. But the end result is it's just still crazy, 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 and there's nothing stopping that crazy from stopping. It's going to stay that way. And, so we go right back to the political side of it, and that is the quantitative easing. I mean, we've seen how heavily that's involved in the politics. So, hey, Giannis, major discrepancy with the ADP non-farms? I doubt it. They've been that way for a while now, I think. Did they announce that? Or are you just saying the big difference between the two? We've seen that before. ADP is so much more now versus the Bureau of Labor Statistics is non-farm oil change was expected to be 224 and actually changed number of employed people during the June was 209. Yeah, see, ADP is kind of like real time and BLS is lagging. That BLS, not only the way they calculate it, but, well, yes, because of the way they calculate it. The objective is it's supposed to be a lagging indicator, not a leading indicator. Hey, Robin. No, it's happened a few times over the last, ever since Mr. Obama. They've had times where, it pops differently. That's because the lagging characteristic. I hear money managers all the time talk about it. They're much more concerned about the Bureau of Labor statistic. They see that as a real time. Also, they don't like the way the Bureau of the ADP. They like the ADP, not the Bureau of Labor statistic. And the way they look at the Bureau of Labor statistic, they look at it as a lagging indicator. Yo, Robin. So that's the nature of it all. Now you can see here the euro is doing a nice job trying to pop up, and the dollar looks like it's coming back, when you see the body of it. Let's put the dollar index up there on Chicago Quant. They're still looking for almost a 90% chance for a 25% increase. Now you can see here, they sold it down a little bit. They put a little shock into it, and now it's battling its way back up again. And they made a low today in the dollar index of 102.64, and now they're back. The high is 887, and right now it's trading at 78. No, 75. I'm sorry, it's trading at 75. So, I'm not really sure how this should play out during the day. I would assume, just a mild guess, that the dollar will be firmer still in the end. I guess the one that really caught my eye is I want to call it, I'm excited, or I'm fascinated by the way the yen is sticking out in the different ways it plays against the majors. That's the one that's got my eye. That's really got my curiosity altogether. But yeah, that's where we're at. They're expecting almost a 90%. It's an 89% chance that they raise rates the next meeting. So they raise it again a quarter, and then he says the same story again, that he's going to sit back and watch. And then the feeling really is by some of the better people that they're going to get the 5.5 to 6. I have a hard time believing we're going to get the 6, but I could see us getting the 5.5 because the bonds keep on reflecting 5.5 now for 4 or 5 months. So it ran up to the 6 month, or back then it was the 1 year, ran up to 5.5, 5 5/8, something like that. And hung around there. Now it's 6 months later it's sitting at 5.5. It's that same situation. So bonds usually have a pretty good handle of what's going on. markets kind of pay attention to the bonds way more than people realize. Every little squiggle and every little twist is usually pretty dramatic with the rest of the currency world, the equity world, the commodity world. It's definitely a major factor. There's no doubt about that. All right, TGIF. Thank goodness it's Friday, and we'll see what the dollar does even just by the time we're done this webinar. And you can see there it's trading at 53 on Duke. The futures contract has a premium in it at 74.5, down one full tick from last time we looked at it. And let's see, where else can we go from there? Let's go to the euro. We saw the euro in a very short-term action. Where is it at? Oh, and that's the other thing. Let's just look at that. The weekly. It's still on the weekly sell. The product has not really shown us anything more than that this is a dead cat bounce. Because a lot of people in the financial markets think we're at the tail end of all interest rate increases. So a quarter point or a half a point more, they've already got it priced into the market. We see that already. So, all right, now let's go over to the euro. And there's the weekly. I want to see the weekly too. 32 on the slow, 35 on the... see, it's trying to turn up again too in this even. It's matching up with our fast right here. All right, now let's go over to the euro. And there is the euro right there. Where's it at? Right there. There we go. And you can see, the firmness for the last couple days. Let's put it up on Chicago. There we are. And it's pretty much, that's the S&Ps. Looks like Turkish lira made a new all-time high. We'll have to check that out towards the end of this. There it is there. There's the euro. And the euro is, in a weekly buy and fighting to get into that daily buy. And, it's awful hard for it to do so when they're pricing bonds at 5.5. What a combination of crazy going on. Really, when you think about it, what we're talking about. Now they're selling the stock market down. Not hard, just down 100 points on the Dow. Here, I'll show you what's going on there. Let's see, where's it at? Right, yes. There we are. And you can see this is, they hesitated, and then they started to sell her down from the 50, almost the 54 area. And now we're at the 35 area. So we've dropped 20 points on the S&P. I'm not sure what, they're going through the numbers. So that's usually what happens. Sooner or later, they see some numbers in there that they don't like. And the next thing you know, it is, they start taking it apart. Now, why can't I find that euro? Where's that euro? Right there. Oh, there it is. It's right in front of me. Okay, that's the euro. So minimize that. There you are. Yeah, so there's the S&P. It's come down from almost the 55 area, 54 even, on down to 35. That's a wild drop there for how long did that take? 7:38, and we are now at 7 minutes. 7 minutes drop, took 20 points out of it. So they're taking apart the numbers, and they've obviously seen something they don't like. Money is saying no. Oh, June government jobs up 60,000. So that could be part of it. Yeah. So, all right. Off to the British pound. Let's see what the British pound is up to. Right there, British pound. Same again, 5 days now on a buy, very firm. In a weekly buy, fast is drifting. Look at that, it's drifting down to the zero line. Very interesting, which means more than likely we're going to see that same action in the on J4X right there. Still got the green, 76 on one, 78 on the other. Yep, that's exactly what's going on. It's trying to drift down a little bit right now. Just a little pressure on it. The fast is showing us, that they're lacking a direction, really. Because when we see the slow move like monolithic, like a glacier, and then the fast moves around like a hummingbird, And when they join in together, it can be exciting. In this case here, they're really, look at it. It's dropped through the manifold, now through the zero line, and you can see here this is bouncing up. And this is just curving, just a mild curve, but way above the manifold. That's another thing they're saying now. The job growth is showing government and leisure and hospitality. Transportation and warehouse, it dropped 7%. Retail trade, it dropped 11%. See, that bothers money managers. When they take a look at, so government and professional business services gained, leisure gained, but then like retail, like clothing and so forth, and delivery of the products and so forth, they dropped. So that says to them that the economy is slowing. That scares them. And like I said, they start taking things apart. Once they start taking these numbers apart, money managers start making the same. They're pretty much educated in the same place. Wisconsin, Harvard, Wharton, where else? Wisconsin's really big for money managers, and Wharton is big for money managers. And then it's like, then you sprinkle the rest in there, MIT or what do you call it, Harvard or Columbia or Princeton, that type of thing. But the bulk of money managers' theory all are equal. They all follow the same numbers. They're all educated the same way, and that's why they don't usually. There's very few you see that outperform the rest of the pack, and usually it's because they're involved in a way of getting information differently, and then using the same fundamentals. Hence, that's why there's so many lobbyists in Washington. All right, now from the GBP, I'll put the daily up there too. We'll go to the Swissy. See what the Swiss is up to. There you go. Now look at that. Swiss is breaking down. It's gaining against the dollar. Let's see what it looks like on Chicago Quant. Let's see, right there. Yeah. So we went into the sell yesterday. Let's put that line in there. And we're in the weekly sell. So it's gaining against the dollar. It's a real mixed bag of action, The dollar index is, just off a little bit. The euro is running. British pound is running. The Swisses. The pairs trades individually are moving very firmly against the dollar. They're trying to tell you that the interest rates are not going to move up much. They're pricing it in. There's the yen. The yen is gaining against the dollar. They're all gaining against the dollar. That had been in a daily buy for something like 15, 16 days. It was like 2, 4, 6, 8, 10, 12, 14, 16, 17. 17 days in a daily buy. And then it finally caved in here. And our weekly is rolling over. At least the slow is moving over too. And the fast is trying to do the same thing. Now, wouldn't that be a surprise if this became the top and it became a lower high over the next 3 to 6 months? I don't have any opinion anymore with this product. I'm not sure what's going on there. So I'm just glad that the math, leads the direction all the time. So it was in the weekly buy back in here, back in April, and a fast one in there on April 10th. The slow one in there on April 18th. And you can see here it's been an interesting ride from the low to mid 30s, like 130, 133, 134, all the way up to 144. Now from there we'll go over to Turkish lira. You can see Turkish lira has gone to 29.31, almost 32 now, taking out the high of 29.29. So it's a couple ticks higher. It's still in a daily sell now for like 5 days. Weekly is very firm. Even the fast is not even through the top of the manifold. I just imagine they'll find something will drive it, through the 30 area. We're gonna, I don't know. I just, for 6 handles now, I've been convinced we're gonna see the 31 area. So we'll see how they play with that. Usually, when it gets to one of those round numbers with them, they do something to try to, to stop it from hurting the population. So I mean, it could go to like 29.98, and all of a sudden it's trading at 27 by some type of government intervention. That type of thing. I kind of said yesterday that I thought they've run out of all the tricks that they could play. So I'm not too comfortable with the idea that they're going to be able to drive it down to 20. I think they, if they're going to do something, I'm not sure what, but if they're doing something, it won't be a big number. It'll be just something that tries to stabilize it for a month or two. It is the summer months. So there's not much of a reason to be too panicky. And I think it wants to drift up into the 30s. So, a combination of all that. It's Doc's idea of Fibonacciing his math to see if they usually do land where they kind of what I suggest. So it's kind of interesting. As long as we're another tip of tea, excuse me. As long as we are in a weekly buy, then it has that shot. When it gets into the daily buy, watch out. That's when it could happen. All right, they're still talking about the breakdown. Retail 11,200 minus, and then transports, transporting goods and services was down almost 8%. That's what's bothering a lot of people. Now the stock market's basically come all the way back again. It has no clear direction. Bounced off the 35, and now it's gotten up to, what's that, 47. Talk about money not knowing what to do. All right. Anybody want to see anything? If not, we will move along to. We'll go to the Mexican peso. There we are. The Mexican peso has been losing it against the dollar the last couple of days. Kind of interesting there. That looks relatively strong, but we'll see. We see it do that right there, and you can't see that. Let's do this. We saw it back in here try to do that dead cat bounce thing, like that, with a big spike. That was the big spike, and then basically failed the next day. And then the next day, 2 days later, it was in a sell and joining in again on the slide. We'll see if this lasts more than another day. Then, that's the Mexican peso. Let's go over to the South African rand. Right there. And you can see that it's gaining a little bit against the dollar today. What was interesting is gold was gold up yesterday? No, I think gold went into the sell. Let's go check out gold. We're going to put the South African rand up on J4X. There's gold. Yeah, gold fell into the sell yesterday. That's why South African rand spiked up yesterday, and today it is just down a little bit. Let's turn off the hinky for a moment. There we go. You can see it's down just a little bit, and you see the fast is at 64, the slow is at 52. So that strength from these last couple of days have really held it up. And you can see here on Chicago Quant, we've got a green and a red, and we are through the zero line at the moment, just trying to perk its head up there, just like it's doing it right here. What else can we say about that? And that's the gold right there. And gold is, basically at the low end of its ebb. We've been in this weekly sell from the $20,050 area. It hasn't really fallen that far. Fell down to 1900 no more than a week ago, and now it's hanging around again, just about $20 above. There's not a lot of conviction to that. And then let's jump over to the Canadian. There's the dollar. I'm sorry, oil. There's oil. They brought it back yesterday, oil. It was interesting. And it's still very firm, holding its weekly buy a very thin thread, but it's holding it. And at the same time, we take a look at, let's turn that back on again. And let's go take a look at Canadian right here. There you are. There you go. You see the Canadian dollar gaining against the dollar today. At the same time, when this thing is rising, this thing normally is going down, which is very curious. We've seen oil here run up from 68. It's a very small run. That's why it's not affecting the currency that much. Let's just contract that. See how tight it's been. So it's been running up for the last 3, 6, 8 days. And when you go back 8 days, right here, this is the 8th day back, right? This is 4. See, 4, 1, 2, 3, 4. Lost. So right here, this should have been going down. Normally that's going down, but since it's a very tight range, it doesn't seem to have much of an effect. In other words, you can see right there, it has been swinging between the like 66 and 75. It's been like a $9 range, and kind of for almost 2 full months now. All of May, all of June, and now into July. And so there's not a lot of, as we like to say, conviction. They're not driven to trade these products at the point. You can see here where it was gaining enormously. That was a combination of higher interest rates and at the same time crude oil doing this. And that's it. What was that? That's March, middle March. And there's middle March. Right, and here I guess that's like middle March. I guess that's it right there. So, it has come down, from their highs. And the dollar, the US dollar is, just kind of sideways. Canadian dollar has done some good gains, just the same way the euro did. And same thing with the Swiss and so forth. All right, that pretty much concludes the currencies. And what we'll do now, since we are looking at crude oil, let's go to where's that mouse at? There it is. So there's crude oil. Let's take a look at that's it, trading at 71.77. Back month in October is trading at 71.50. So it's now got a 27% premium. And as we've been saying the last couple of days, it looks like the buyers are back. They want delivery. They need inventory. So they're buying the front month. From there, we go over to natural gas right there. And let's put on J4X, let's put the Brent up on that. Right there, there's Brent. Same thing. Wow. Just banging, just a tight range. No heavy love for this stuff. Again, the driving season normally does push up the oil prices, but maybe it's all done and over with. They did say, they speculated that last weekend was going to be really busy, and it was, car-wise. Gas prices popped for a couple of days around here and then stalled out. That's nice. But you can see crude oil contract kind of just holding the higher end of the range at the moment. Now, let's put nat gas. There's natural gas, $2.61. It's actually $2.61.6, almost $7. So it's just quiet, just a couple dollars. And at the same time, our work over here on the United States is showing it's in a buy now since the 240-ish area. And mid-40s, I guess you could say. It's run almost up to $3. And right now, the last couple of days has been in a sell, but it hasn't really gone anywhere particular. Then from there, what do? We go to Spain and take a look at the energy company in Spain that we watch, where the stock is trading in the 27s right there. Wow, nice. It really spiked that down the last couple of days. Look at that. From 27.5 down to almost, did it break it? Yeah, it went down to 25 the last 3 days. 25.80. Is that 25? Yeah, 25.86. That's a good sign. That's very healthy. So, what else can we say about any of this? Guess that's about it. That's the action we've now seen in the natural gas and energy area. Let's go back to gold and silver and see what they're doing. There's the gold again. And over here, there it is. So there's the gold. Just hesitant. Wow. That is something. It's so hard to believe that they can push this product down into that low area 17. But they can. And we're not. It couldn't get the all-time highs there. Over in silver, let's put silver up there. There's silver. And that move has been doing the same thing. From the 26s, it found its way back down to 22. It's been interesting to watch in the sense that as much as we see inflation and we're concerned about, bad government, good government, whatever government, it just doesn't seem to have that much of an effect. Crypto this and, electronic dollar that, you would think that they'd be reaching for the metals, and they are when you go to buy them physically, but when you trade them on an exchange, has no real effect. Well, let's see what they're saying here now on they say the Fed is out there to break something. They say that the Fed has to break something for it to want to lower rates. All right. From the silver, we'll go take a look at copper. Copper's been soft lately, just a slow, steady drag, locked in between the 60 and the 90 area. 3 days in the sell. It is, look at the fast, it's breaking even the bottom part of the manifold. If they put some pressure on this thing today, it could make it into the weekly sell, but it would have to take out this week's lows and then go a little bit further. At the same time, next week, this thing's going to be flirting with the weekly sell. All right, now they're talking about Bidenomics. There's the platinum. Let's fix that. Something doesn't look right there. See if we can reload this thing. Something's wrong there. It was a big drop yesterday, and then put it in a sell. Let's see if we can go like this. There we are. Yeah, that was way up here. The high was something like that yesterday. Let me go find the high and straighten that out. Let's see. Yeah, yesterday's high was much higher. Okay. Let's fix that. There we are. Yeah, there we go. Let's fix that. Right there. And was that settlement right? The settlement is right. Okay. There we go. Now let's see how this works. Now we've taken the exchange numbers and put them in on yesterday. There we are. That's better. And that's right for today too. Yeah, just up a little bit, nothing major. And that's the action we're seeing here with the platinum. And platinum's weekly has no strength in it at all, which is, a concern. The metals complex usually doesn't go if platinum isn't leading it. It doesn't, it's trading $1,000 underneath gold, and the gold and the silver ratio are wild, compared to what it's ever been before. But at the same time, if platinum doesn't lead, the rest of the market doesn't go, and that's unfortunately what it comes down to in the end. There we go. Just double check I got that. There we go. Let's try it one more time. Good. Well done. All right. That completes the metals complex. And we've got, like a good 14 minutes still. We can take a look at the stock indices. I think they're selling them. They sold them back down again. Nothing major. I mean, it's a very soft action here. There's where the number came out. They ran it up to here, sold it down, took it almost back, got to the bottom end of this range right here and stalled right there. Sold it back down, made it another new low. Now it's trying to do the dead cat bounce. You see we've been in a buy for 6 bars here. And let's see if we can watch this for a little bit and see if it gets into the sell. At the same time, we can go back over to, there's the daily, and the daily is, in a sell from yesterday, and the weekly looks very firm, but the fast has broken underneath the 0. So there's, it's really breaking up. There we are. All right. Yano says DXY dropped and is now back. I know it's so sloppy. U.S. gained 209 jobs, right? But 30% of that was only jobs some industrials did lay off. Yeah, that's what they're concerned about. Is they're taking it all apart now. Yeah, that's what I was saying to you. Is that the top side, 60,000 government jobs. I mean, that hurts growth. That's for sure. I mean, government is not here to help you. That's for sure. And as you can see here, the S&P, which yesterday they pushed down. It's they haven't taken out yesterday's lows. Will they take them out? Maybe they'll test it at the end of the day or middle of the day. And then money, will they really want to come into the second week of July? Short. More than likely not. They'll probably try to hold on to the market itself. But again, I'm not looking for anything more than one wild couple days. Like maybe it goes up or down. Well, we already had it. We had the Dow down 2 days ago, down 500 points, and they're holding. Here you can see. Was it yesterday? I guess it was yesterday. Yeah, 500 points. Right there. And they brought it back about a third. And then they keep on trying to lift it back up again. And the weekly just barely breaking down. Let's take a look at the Tech 100. The Tech 100 is 3 days in a sell. Let's grab one of these sells. There we are. Let's grab that buy and put that in where it went into the buy. Right there. And let's put that sell in. So it's in a weekly buy. It's not letting go. Let's take a look at the Dow Jones Industrial Average. Right there. It's been in a weekly buy for 5 weeks. It looks like it'll hold up this week, but there's a lot of pressure on it right there. That has to be fixed, of course. Let's fix that now. YM. There we are. Let's fix that. So yesterday, let's find what that is. Yeah, Yana says you're right. That's what it really comes down to is the numbers. That's what one of the money managers that I've seen for years, and he's usually pretty accurate. He's very accurate. He came up with the statement of, and I hear money managers say it. The Fed believes they have to break something. At first, it was regional banks we thought, but I'm not sure what they think they need to break. They need something to go into a pure chaos so that they can stop raising rates. They won't do it until something breaks. Weird concepts, I'll tell you that. All right, let's put that in now. We'll straighten out Dow. Let's see. Oh, okay, that's what the problem is. Let's cancel that. Like that. Like that. Okay. There we go. That makes more sense. Let's see if we can reload it. All right, now let's try fixing it. All right. So, what is that? That is 5th. There's the 3rd. Let's see what we have here. All right, and that needs to be fixed also. It's like, that's the 30th, right? Is that the 30th? Yeah, that's the 30th. So let's fix the 30th. And let me just check the chat line, making sure no one is saying anything at the same time. because I don't want to miss any messages. There we are. I can see the chat line in case someone says something. All right, there we go. Now let's fix this, and we'll see what the Dow looks like. Because the Dow is kind of like platinum in many ways. The Dow seems to lead the market, overall. It doesn't, it can fail, and the rest of the market goes sideways. But there's no doubt it does act as a pillar of the market itself. And when it finally went into that buy, we had that massive explosion. We'll show you this in like 30 seconds once I fix this. That's there. All right, now let's fix Monday. All right, there we go. And that's right. Okay, let's fix Wednesday. There we are. Okay, that looks pretty good. All right, and then that's what we need to fix is the 6. That needs to be straightened out altogether. There we are. All right, we're getting ready to see it here. Let's just make sure the settlement was right. 31. Okay. Let's fix that. Okay, now we'll see this action here. Yana says, I got a call. Sorry. So the data is rather mixed, and the jobs are even lower officially if one deducts the government jobs. Yeah. And what bothers them is the last two, really. The retail, that bothers them, and the temp help and transport really bothers them. That's what the problem is. Those things, they really don't like to see that weakness there in those things because they figure that's disposable income. In other words, it's like the ADP. It's very short. It's more live, and that's why they that makes them even more nervous because they really do want an active market, that's healthy, an economy that's healthy. Yeah, so there we are. And let's see what the weekly looks like. Let's just double check that. There we are. So this is very close. If they sell this down today, we could end up back in a weekly sell. Look at how both of these are joining in. Very close, and next week could be worse. And so could we see a Dow at, like, say, 33,500 again? Could. You see another 500 points off of this, maybe even 700 points. They want something to break. That's what their attitude is about the whole thing. They want something to break. That's the craziest thing for a government agency to, or quasi-government, however you want to frame it. But it is amazing. They're looking for some disaster. At first we thought that's why markets rallied on the major regional banks. When a couple of them went down, they thought, okay, that's it. They've finally broken something. But they're looking for more. Money managers are looking for more damage. I think they want the real estate market to have a small collapse. That's what they're looking for. I think that's exactly what they've been looking for. Especially in the cities. They're looking for rentals and everything else to drop. They want to see office space. They say that office space is, really at its low end to begin with of use. So that's where I think their heads are at. Now this is the most interesting of them all. As much as I use the Dow as a confirmer, right? The Russell 2000, took off back in here after like 3 months of not being able to go anywhere. Gets into a buy, and you can see it did the same thing as the Dow did yesterday. It's been in a daily sell for 3 days, and it gave us a volatility signal right there at the same time. The Russell 2000, speculative money is saying no. Not interested. That's what it's trying to tell us. So in other words, that's the other one that I'm sure they're paying attention to, and that is that the what do you call it, the Russell 2000, which is these very low capitalized companies, small companies, $500 million to $5 billion, things like that. That is telling them that the speculation, that cash that goes to speculation, is not interested in spending it right now. And when they're not willing to buy, that puts pressure on the rest of them. Let's just go back to the Tech 100. Or there's the S&P. So the S&P, it's at the top end of its range. Very smooth, like, oh, world's okay, no problem. And then the Tech 100, same thing. I mean, the S&P 500 is up like anywhere from 11.5% to 13% so far this year. When it comes to the Tech 100, which is the one that has Google and Amazon and Tesla and Microsoft and Meta and Nevada, has all the big names in it. Same thing. This thing is up almost 24% for the year. 25%, something like that. It's pretty good. I think it might have even got close to 30% at one point. It's a lot of strength there, but it's also been in the sell for 3 days, and the weekly is trying to break down a little bit, but it's not going to be this week unless they really slam this market going into the end of the day itself. Now, what can we say about this webinar? It's been a quiet in the sense that the the labor numbers, like yesterday, were very provocative, I guess you could say. They really are. They are really trying to excite the marketplace. So I think we're going to go with the title. What should we do with the title? All right. What should we call this? I guess employment. The Fed hasn't broken. The Fed hasn't been able to break anything yet. That's what it seems like, and that's the weirdest part of it all. It really is. Employment. I guess you could say that the ADP. Well, we mentioned the ADP yesterday versus the BLS, and so it's still going to stay that way. I doubt that, because ADP is so real time, and BLS is so laggard. So I guess they were expecting 226. It was 209. So I don't know. It would have been interesting if it was a little bit more plus. I'd have been sure. All right, I'm going to have to come up with some type of name for this, but I'm not sure what yet. Anyhow, this is Doc from North America. We will catch you all on Monday, same time, same channel. And Janos, you hang tough in there. And be safe, be smart. And we'll talk to you later. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.